You know the story we always hear, right? America's the world's biggest borrower, just drowning in debt. In China, they're the smart, prudent lender, buying up all that debt and saving for a rainy day. It seems so simple. The US borrows, China lends. But what if that whole picture, what if it's not just missing a few details, but is actually completely backwards?
All right, so let's get right into it. Now, if you just look at the surface, the numbers seem to back up that story. What you're seeing here is the official government debt compared to the size of the economy. And yeah, the USA is at a massive 123% of its GDP. China, on the other hand, looks way more reasonable at 84%. So case closed, right? Well, not even close.
The thing is, those official numbers, they're technically correct, but they're also incredibly misleading. It's like you're only seeing the tiny little tip of a giant, hidden iceberg of debt. And here is the number that should really grab you. This is the one you never see in the headlines. When you add up all the borrowing, China's total debt to GDP ratio is estimated to be somewhere around 300%. I mean, just think about that. That's almost 3 times their official number. And it's way, way more than the US. So how is that even possible? Where on earth is all of this debt hiding? Okay, this is where we need to start digging. See, in the US, it's pretty straightforward. The federal government does most of the borrowing, and it's all right there on the books. But China, it's a totally different story. The debt is spread out, almost intentionally hidden, across this huge, complex web of entities that are all tied back to the government. And this chart, wow, it just lays it all out. That official 84% we saw, that's just the central government. Now, let's add in the provincial governments. Boom, you're already at 160% of GDP. That's already higher than the US. But the real monster in the room, that's the state-owned enterprises, or SOEs. They're holding a staggering 140% of GDP in debt all on their own. You add all those pieces together, and that's how you get to that wild 300% figure. So let's just recap how this whole thing gets built up. First, you've got the central government's official number, the one everyone reports. Then you pile on the provincial governments with something like $12.6 trillion in debt. But the real key, the secret ingredient here, are these state-owned enterprises. We're talking about over 391,000 of them. Technically, they're companies, but really they're owned by the government, and they've borrowed over $30 trillion to build all the stuff the government wants. You know, airports, high-speed rail, bridges. And by doing it this way, they keep all that debt off the official central government books. It's a very clever system. So, okay, we've established this massive, hidden mountain of debt. Now, logic would tell you that if you're that much in debt, borrowing more money should be really expensive, right? I mean, more risk should equal higher interest rates for lenders. Well, this is where the story gets even weirder. And look, if you check with the big credit rating agencies, the so-called experts, they'd agree. They rate the US at AA+, which is a very safe bet. China gets a lower rating, A+. So officially, the agencies are telling us there's more risk in lending to China. And that makes total sense. So far, so good. But then you look at this chart and the whole thing just falls apart. This shows what each country actually pays to borrow money for 10 years. The US is paying around 4.5%. And China, the country that we were just told as riskier, they're paying a measly 1.7%. That is almost 3 times less. So how on earth are they pulling that off? Well, the answer is that China's financial system is playing a completely different game. It doesn't follow the normal free market rules we're used to. The best way to think about it is like a walled garden for money. So first, you have capital controls. Those are the walls. They make it incredibly difficult for Chinese citizens to invest their savings anywhere outside of China. Second, inside that garden, the other plants, like the stock market, are, well, they're not very good. They don't grow well. And third, the gardener, which is the government, basically orders its own state-owned banks to buy its government bonds, no matter how low the return is. So all that saved up money, it basically has nowhere else to go. And this quote really nails why those alternatives are so bad. You know how in the US people say the stock market isn't the economy because the market usually grows way faster? Well, in China, it's pretty much the opposite. The economy has seen this incredible growth for decades, but the stock market, it's actually lost value over the last 10 years. It's just too volatile, too state-controlled. Nobody sees it as a reliable place to grow their money. And that pushes everyone right back into the arms of those safe but very low-yield government bonds. And there's one more layer of weirdness here: deflation. Right now, most of the world is fighting inflation, right? Your money is worth less tomorrow than it is today. But China has the opposite problem. Prices are flat, or in some cases, even falling. So suddenly, getting a guaranteed 1.7% return on a government bond, well, that actually looks pretty good when you're not worried about inflation eating away at your profits. All right, so let's take a step back. The debt is absolutely massive, but they're paying crazy low interest on it. This whole setup just feels incredibly fragile, doesn't it? But China has one more card up its sleeve, and believe me, it is a huge one. The Chinese government owns stuff, a lot of stuff. Just to give you some perspective, let's look at the US government's balance sheet. If you take everything it owns, all the land, buildings, military gear, you name it, and then you subtract all of its debts, what are you left with? A net worth of roughly negative $40 trillion. Okay, now let's flip over to China. And look, the exact number is hard to pin down, but credible estimates put the Chinese government's net worth somewhere in the positive, maybe around $20 trillion. Think about that for a second. The US government owes way more than it owns. The Chinese government owns way more than it owes. This isn't just a small difference, it's a fundamentally different reality. So what are we talking about here? What does the Chinese government actually own? Well, for starters, the state officially owns all the land in the entire country. It owns all of those state-owned enterprises we talked about, which includes some of the biggest companies on the planet, and of course, it owns all the major utilities. What this means is that if a real crisis hit, the government could, in theory, start selling off these assets to pay down its debts. That is a safety net that governments in the West just do not have. So what this all comes down to is that this simple story of borrower versus lender is just wrong. It's not what's happening. What we're really looking at are two completely different economic models, each one dealing with its own unique and, in many cases, completely opposite set of challenges. And this table just drives that point home. It's a perfect contrast. In the US, the big problem is that we spend too much, overconsumption, which leads to inflation. You could argue the private sector is underregulated. In China, it's the exact opposite. People don't spend enough, underconsumption, which leads to deflation and a private sector that's completely overregulated. It's wild. They're like perfect economic mirror images of one another. And that, right there, is why the simple us versus them story is so dangerous and misleading. The reality is that these two giant economies are tangled up together, and both are juggling some massive, potentially world-breaking problems. If they ever had a real economic falling out, there wouldn't be a winner and a loser. There would just be losers all over the world. So that leaves us with the big multi-trillion-dollar question. Is China's whole state-controlled system, its ability to manage its currency, to own all these assets, to tell the economy what to do, is that a unique kind of strength that lets it defy the laws of economic gravity? Or is that 300% debt to GDP ratio just a ticking time bomb, a giant house of cards waiting for one strong gust of wind to come and knock the whole thing down?